Yo, what's up you guys? Welcome back to another video. Today I want to share something with you guys based off the last thing that we've spoken about, right? Now I made this video not too long ago and a lot of people were going, thanks, this is informative, powerful stuff. I really love the video. You are a star and thanks, bro. So the thing is that I decided to go back and look at some other ways to provide you guys with some strategies that is very simple, but it's very effective and that you can use, right? Now I've been testing this with someone else, right? So we've been going through this information for about 2 weeks now, right? And I thought to myself that I'm gonna put it out there for the universe, which is you guys, to see, and I want you to use it as well. Now I know there's an expert that's gonna be in the comment section who's got a negative history on his MT4 account that's gonna say, yeah, but this don't work. The best thing you can do for yourself is rather go and test it. Okay, just go and test it and see the results that you'll get with it. It's probably better than a course that you're gonna pay for, the version 3.0 or 4.4. And no, I'm not gonna talk about those who eat grass, right? Now, the first things that we need to talk about is a currency strength meter. And for this, you're also going to need Fastball. I will leave a link in the comment section below. For Fastball, we're going to go to data. We're going to go to institutional data. Okay. From institutional data, we're going to go to speculative sentiment. Now, if you don't know what this is, after paying hundreds and thousands of rands for courses, this is basically retail trader positions that are in the market. It means what are you doing in the market? Are you buying? Are you selling? And this is the average across all of these brokers. So if you are with XM, I can see you are selling, you are buying gold, and some is selling gold as well. So we need this information because it's important to understand which direction retail traders are more likely to go, right? Remember you're trading against very big institutions here, right? So these big institutions doesn't have your best interest at heart. It's not their job to make sure you make any money. That's their job to make sure you lose money. If you've ever heard about order flow information is a reference made to big institutions, hedge funds, banks, orders in the market, right? Now that data is delayed. This data gets updated every day because it allows these institutions to see exactly what are you doing and how can they come and get your money. Now, remember, there's a thing that some people always say only when they make money is that your stop loss is my entry, like something like that. You know, people like to make fun of that, but when they lose, then they don't say anything. But in any case, you're going to need this and you're going to need this. There is a very high correlation between the two, right? And I'm going to show you how the one works into the other. I'm going to use one example. I'm going to make one example for you, and it's your job to go and apply it. And again, not all strategies. I could be selling this to you for 500 rand, but I'm not. Am I going to make 500 rand on this video? No, unless I can get a lot of people to watch the video. So the idea is to give you guys the content that you require in order to become better at trading so that you don't have to spend any money, right? Now, let's go through this very quickly, right? Now, one of the things that you want to understand first is the currency strength meter. Now, the currency strength meter is exactly what it's telling you it is, right? It gives you the overall strength of a currency. This is a bar that tells you how strong a currency is, and this tells you how weak a currency is. So going that way, it makes it weak. Going that way makes it strong. Now, you want to be looking at these two things, and then you also want to be looking at this here. Now, how does this work? You might be thinking, sitting there while you've paused your FX Goats 4.0 course to watch this video. I will explain to you now. So you always want to look for a currency that are the strongest to a currency that are the weakest, or that is on the opposite side of it, right? Now, in this case, what we are going to use is we can go ahead and look at something like AUD USD. Not particularly. I'm going to tell you why I say so, right? So we're going to look at AUD USD, for instance, right? Now, yesterday I took a buy on AUD USD and then I took this sell from that structural point there as well, because it only makes sense to sell, support, broke out the resistance. But I've applied the same method here, and you can do it as well. Right now, let's go through this. The first thing you want to do in the morning when you wake up and you want to look for a position to trade in the market is you want to first know what it is that you like to trade, that you're more likely to trade. Now, the reason why we're looking at USD currency pairs is because a lot of people have a preference as euro as trading the dollar index, because it's the world's largest index or currency that a lot of people like to trade. Now, that's it. What is forex? Maps explain that already, so I'm not gonna get there. But what you want to do is you always want to come and look over the currency strength meter. Now, you don't rely on this as much as you're going to rely on this, right? Now, this is for my scalpers. This is for the people that wants you know. And when I do this is more like day trading. So you want to come over here and you want to go, the dollar index is the strongest and AUD is the weakest. Now, firstly, you can obviously see that in the price action that had taken place throughout today, or what's the date today? The 8th, right? We're going to go directly to the 8th. Yeah, right? We can see this is where the 8th basically started, right? Now, you can see here the dollar index is the strongest, AUD is the weakest, and we can basically see that happening on the charts as well. Now, let's assume that this is what you wanted to trade for the day. You wanted to trade USD JPY as a buy, or you wanted to trade AUD USD as a sell, right? That's what you want to do. Because remember, we're saying that AUD is weak, USD is Y. Therefore, the AUD is weakening against the dollar index. Now, you want to look at that first, and remember, there will always be rules for entry. That is very simple. It is all market structure related. So to give you an example, something like this. This is where you would need to enter this trade the same way I have gone to enter the trade there. Now you might go, but why didn't we get a rejection from there? Because this over here is considered the most recent structure. Now I know someone's going to come and say, yeah, but there's a fair value gap at Fairfield. And yesterday then Joburg, or then Bellville, I saw a guy, he was saying that is a W formation over there. And I know it's okay. That is why we are all here. We are gathered here because we are learning every day. I don't want to confuse myself. So firstly, what we see here is that we've got dollar index is the strongest, AUD as the weakest. Now, that is our first confirmation, right? The first confirmation that we look for is, that we look on the currency meter, okay? Strongest, we look for the strongest and weakest currency. Now, we don't just come in here and we say, we're going to sell. Yeah, it looks like a sell because it's a buy and a sell here. We come over here also. Now, what we're looking for here is the opposite of what this is showing, right? Sorry about that. So we're looking for the opposite of what this is showing. And the reason for that is there's a saying that goes that you always want to be on the opposite side of what the retail traders are doing. Like some people will always say that, oh, but yeah, like when like with the signal reviews that I do, you always get people that would say, yes, when they buy, I will sell. Like that kind of thing. So it's similar to this. So now we're going to take a look at AUD USD, right? And we can see here 55% of retail traders are selling and only 44% is buying. Now, when you look at the lesser amount, you will see that less people are buying and more people are selling. In this case, there is a high possibility for this market to continue or to make this U-turn, right? It's more possible, there's a higher possibility for the market to go up than it is to go down. But you can see the difference between the buyers and the sellers is not that much. You probably would be looking at something like this, Euro JPY, 63%. You're looking for those high percentages, right? So in a situation like this, I would say that you don't take any trades. You basically wait for the market to have this shift where you will get even more buyers, because that means you will get the sell that you are looking for in the market. Now, in a situation like that, I would probably expect this market to continue higher first. Why? Because we've got less buyers than we have sellers. Then when we reach this level, then you'd probably see this shift over here from more sellers to more buyers, and from less sellers to more buyers, and that is when you want to get into the market and basically execute your trade. Now, what does the best probability setup look like in this case? The best possibility setup in this place basically is that you would want to look for, let's just assume AUD is the weakest, USD JPY is the strongest, right? When we come and look at AUD USD, we also want to see here AUD USD. You also now want to see that most retail traders anticipating AUD to be the strongest and the USD to be the weakest. I hope that makes sense, right? We look at the currency strength meter. If the currency strength meter tells us that the dollar index is strong and the JPY is weak, then this needs to tell us that more people are doing the opposite of that to give us that confirmation to get into the market. Let's look at another example, which is USD JPY very quickly. So this is USD JPY. Now, firstly, you can see here, according to the currency strength meter, the dollar index is the strongest currency, JPY is the weakest. And for that reason, you can see how this market had continued the bullish move to the upside. And this market basically opened here, right over there, right? And we're probably going to go till there, right? That's the first point of reference. Now, if you look at USD JPY over here, you can see that there's more people selling USD JPY as opposed to buying. So this would have been the perfect buy if you woke up this morning and or even if you took it yesterday, but this date is updated every day. This would have been the perfect buy, because why? You would also make use of structure in the market to get your entry with a stop loss below that level there as well, and you could have continued to run this trade and you could have probably been at break even. But the person that I'm using this to have back tested actually took a buy on USD JPY, but I think it was a little bit too late at that level. But that's what happens when you sleep throughout the good things, right? So this is basically where we are at in this regard, right? So that is something new that I've learned, and I thought I just wanted to share it with you guys. And so to put it into perspective, what you do want to do is you obviously want to learn about market structure. If you don't know what market structure is, that basically will teach you how to get into this trade, right? How to trade, how to get into a trade, right? That will teach you that. I will leave a link to all of this in the comment section below for you guys to go and check out, so you can go and have a look at this very, very quickly. Remember, the rules are simple. You're looking for the strongest to the weakest currency, and you're looking for the opposite of the strongest and the weakest currency on this move. And then you come and you look for the lowest point if you want to buy, or you look for the highest point if you want to sell. Alternatively, if the data does not match, there's two things you can do. Is you can leave it, don't do anything, right? Or you can look for alternative currency pairs where the highest and the lowest, where the greens and the reds is the opposite of this greens and reds on this side here as well. Guys, test it. Let me know your thoughts. Remember, there's no strategy that is 100% accurate, but I have tested this one for about 2 weeks now. You can test it on a demo account, see if it works for you. If it doesn't, it doesn't. Maybe it's not yours. Maybe you're not patient enough. I don't know. See what happens. Let me know your thoughts in the comments below. Thank you for your time. And as always, cheers for ears.